have Indy Guha, who's going to come up. And Indy is a longtime friend of Signifyd. He invested in Signifyd and then worked at Signifyd. And he'll tell us what he's been up to lately. And I also have Hani Batla, who is a longtime customer of Signifyd, and he is a CTO at Adorama. And I'm super excited to have him here. And so, obviously, we're going to talk about tariffs. If you're here to have solutions, I have bad news for you. I don't have solutions, but I do have thoughts. I have spent more than probably 250 hours over the past couple weeks, months, I'd say, a month, putting this framework together, testing it with our clients, and talking with analysts and with bankers. And so I feel pretty confident in the framework. I tested it with these guys. I got a very rare, oh, this is pretty good from Indy, which is nice. And so I wanted to share that framework with you and how I've been advising our clients from mom and pops to Walmart to how to think about tariffs, and for me to understand how they're thinking about tariffs. So I wanted to share some of that with you today. But I wanted to start with just this, what do we kind of think we know? And inflation is the primary thing that might change what this administration does or does not do with tariffs. I think the Times had an article out just today that I thought might change this session. Is Trump going to blink again? Are things going to change? The only thing I feel confident about is uncertainty. And so you have here on the right a kind of projection of the blue is if we have limited tariffs to heavy tariffs, what is that kind of spread? Kind of a 6% growth rate spread based on scenarios. That's kind of general consensus. My clients are telling me that as well, and so that's kind of what we've baked in, that where we would have been had this not happened is the blue. The gray is kind of moderate tariffs, call it 10 to 20%, and then the red is something more than that actually might happen. But again, uncertainty is the key. This is a little bit of an eye chart. I do very strongly suggest you go to the Peterson Institute for International Economics. They have an excellent UI where you can filter. I have, for example, filtered here on China and US tariffs, and kind of a recent timeline. We'll be focusing on the US market today for obvious reasons. But one thing that I did want to note is kind of like the recent timelines from March 4th to April 12th. Even this is kind of overwhelming, but it is very well put out together. Can anyone, and this, sorry, I should preempt, I would love for this to be a little bit more interactive than some of our other sessions have been, and so can anyone cleanly tell me what the de minimis exemption has been in the US? Yes, David.
So we get Shein and Temu, it directly affects us.
Yes.
It lets them ship up to $800 worth of goods in the US that we used to like that.
Beautifully, simply, succinctly said. He is the winner. But I'll repeat it for everybody else. So the net is that under $800 can be shipped directly from foreign markets into the US without having to go through customs and imports and have no duties or tariffs. He cited correctly Shein and Temu are the two most prominent, collectively 60 to 75 billion of USD, and so we'll talk about that in a second. This should end, in theory, on May 2nd. We'll come back to that later. Okay. All right. This is some Signifyd data. I want to orient us on the X and Y axis. So from December 30th, kind of indexed at the beginning of the year, to this most recent week, the blue line is change in price, and the yellow bar is change in quantity. And so this is how I sometimes look at different level of inventory management and SKUs and what happens in terms of pricing. I have a glass of champagne for someone who correctly guesses what this category is. I will give you more data in a second that will help you maybe be able to answer this question correctly. But what this looks like on a weekly scale is, as price goes up, people buy less. Oh, well, Bennett, that's stupid, and everybody knows that, right? People don't like to spend as much money. Well, what if we dig in a little bit more? We start to see quantity wildly swing and get sawtooth. And then we see prices kind of stable, especially in that like Feb 24th to March 24th timeline. But we see huge swings where volume spikes and then volume tanks. This is an indication of inventory management problem. Does anybody know what SKU this is? I guarantee you 99% of you have bought this year. Eggs. Who said it? Yeah.
Right here. Does it get champagne?
Yes.
Who are you? Peter who? From Capital Brands.
Fantastic. So these are eggs, and so we have pretty extensive grocery network in our commerce network, the largest grocers in the U.S. And so I thought this was really interesting. Obviously, eggs are not impacted by tariffs; they're impacted by bird flu. Hani was like, Hani got it in our prep session. He was like, "Of course, it's the bird flu," and blah, 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 and et cetera. Like, yes, that's right. So these are eggs, and what I think it's interesting is, this is the type of things that we expect will happen with inventory management, assuming some amount of tariffs comes in, assuming some amount of delays in shippings come in. We're going to see this kind of sawtooth kind of behavior. Indy, Hani, anything you want to add on this?
I mean, I like eggs.
I love it.
Other than that, I mean, eggs are critical, but it's one of those things where we've all played the game where I know we have a whole channel in our team, Slack, whatever, where we just say, hey, what do we find the egg prices for when we're at the worst, right? I think the highest I saw was like $17 for a dozen or something.
Yes.
Not organic, not free range.
Yes, just available.
Just available. But
Black
I mean,
market
eggs are supply and demand, but it's the uncertainty. I think the theme here is uncertainty.
Beautiful. That's what we wanted to get to. What happens when the consumer doesn't know when they can get their eggs, and it's a necessity? We'll come back to this theme later on in the framework. Okay, it's eggs. All right. All right, so this is another category that is tariff impacted. And you see here, the price hasn't really changed, right? Sorry, I lied a little bit. It's very price sensitive for a little bit. It goes up by 2%, and immediately you see a tanking in terms of its volume. And then there's an experiment with price increases, and then things don't recover until prices go back down to the original levels. So these are tires. I wouldn't expect nobody to be able to get this on the data, but these are tires. And so auto imports, parts imports, et cetera. This is another example of a category that we track. And the reason that I'll talk later about why I care a lot about tire sales in the US as an indication of economy health and as an indication of how people are spending their money. All right, and this is another category. Hani, these are cameras. Mm-hmm. Do you want to talk a little bit about what this graph tells you about cameras? I mean,
it's simple, right? People buy less when things get expensive. That's the thing. But in this particular one, you can see that there was a bump in people buying because people were anticipating more price increases to happen.
Exactly, and so a little bit of a pull forward, 100%. And so I think that's another theme that we'll talk about. And so to the extent that you have data that you can monitor, I strongly suggest you to look at SKU level. I strongly you to look at monthly, weekly, daily. If you have inventory management problems, it's very, very difficult to kind of understand all of these pieces. But the data will help, and the data does tell a story. Okay, all right, so let's get to our framework. All right, so Chinese supply chains are being economically stress tested, quite similar to how they were during COVID, actually. Hani and I and Indy have differing points on point 2, so we're going to talk about our differing points on shipping lanes that will get clogged. And the de minimis exemption may lead to opportunity for competitors for the reasons that David mentioned. And so I wanted to ask a few questions to the panel. Hey, what is the single biggest shift you're seeing in supply affecting your area of expertise now? How are you thinking about that reliance on Chinese exports?
Well, as a company like Adorama, which is pretty much a specialty electronics retailer, we don't really have that many options, right? I mean, most of our products are made in China or other parts in Asia right now, or Japan for that matter. And you can't overnight switch supply chains, right? Because that's where the goods are made. There's nobody's going to start suddenly put a new factory in, I don't know, Indonesia and start making the same goods overnight. So unlike the eggs, which can be imported from somewhere else in the world, cameras and electronics, not so easy.
Yeah. And so I actually was talking with another brand, and they plan to ship parts to other countries and then have a finishing, but it took them 12 months. And so they had planned for this, 11 months ago. So in terms of inventory management problems, I've heard the fastest that I've heard someone claim they could get something stood up was 9 months. Maybe, that seems impressive to me, but that's kind of what they're thinking. Indy, what are you advising your portfolio? Oh, sorry. Do you want to explain what you do now? Let's start there.
Yeah. So for the group's context, I'm back in venture capital at a firm called VMG. VMG has a 20-year history in consumer brand investing, so think Spindrift Water, Kind Bars, Rare Beauty, but also a technology fund where I sit, where we invest in technologies that support the growth of these brands and retailers. And so from the perspective of our consumer fund, a lot of the work, similar to what you all are probably working through, is how do you quantify your supply chain exposure? And specific to China, how big of an impact is that to your cost of goods and your margin structure? I think, thankfully for our portfolio, most of our consumer brands are food and bev and health and beauty, where you actually can reorient your supplier base, because it's mostly raw materials outside of China. And you can onshore or nearshore a lot of those inputs. That said, it's not immediate, and some of that work probably started months ago. From a technology perspective, I think the emphasis has shifted, as you might imagine, in line with Bennett's opening comments, to hey, how do you bring the speed of AI to supply chain and risk management and network modeling and allocation modeling? Because those used to be once a year or twice a year activities. And over the last 5 years, if we've learned anything, they need to be always on activities. And so there is a new class of thinking emerging on how do you build resilience into daily and weekly decision making, and what is the role of technology to support that? So less of a China-specific comment, but certainly an important trigger.
Yeah. Any questions on this framework before we dive in a little bit more? It's okay if no. All right, your window has passed. Okay, so this is a kind of visualization of ports. And so, Hani, I know that you and I have a minor disagreement on this, which makes a ton of sense. But my opinion is that shipping lanes from China that have these super ports, these massive capabilities, these massive ships, are going to be moved to the extent possible to other ports as Chinese shipments go down. What that means is, let's say that you were in Cambodia or India or Japan or wherever, and you have diversified over the last 5 years. You said, I'm Walmart. I have much more production in India. I'm Apple. I've shifted some of this. I'm Nike. I'm in Vietnam. So I have enjoyed a pretty stable supply of shipping lanes from the ports that I use. As those other ports go down in usage, they will then move those ships to other places. We saw this during COVID, for example. And so I fully expect that the shipping costs for non-Chinese lanes will potentially double in price again. And so one very concrete thing that I think you can do is, to the extent that you believe that this might impact your business, either because you rely on Chinese exports, which you certainly might not even be here right now that much, but if you're somewhere else, you should probably build in some additional shipping costs to your shipping lines. But Hani, you had a point that you wanted to kind of bring up about like ports and flexibility, and will they even move that much?
Yeah, I mean, it goes back to something you just said earlier, right? Where our goods are made, don't shift that fast. But even there, right now, I think the main theme, and I'm going to go back to it, it's uncertainty, right? Even if you do successfully manage to move some production and find a port that is now, you're getting goods from a place where those ships are already positioned. I don't know, I'm going to go off the top of my head. I see Singapore right there at the bottom of the...
Yeah.
Nothing will change there, right? So you always have availability there. But I think this will not change for companies like mine, but I wouldn't reckon in Indy's case, I think a lot of his portfolio companies could probably shift where they get their goods from to make the finished product.
Yeah, I think that's fair. It's very category dependent, right? I mean, let's take footwear. There's such a deep history of specialization in footwear production and manufacturing across a handful of key markets in these lanes. It's just really hard for that industry to adapt. And so certainly some of the chatter on where the tariff regime goes is, if you are structurally locked into a long-term supply chain, the expectation will be that there's some tax credit or some offset that helps you deal with migration. But I think, switching gears for a minute, for the folks in this room, I would challenge your supply chain counterparts to think about forward buying capacity and how do you lock in pricing to offset some of the price movement happening on different shipping lanes. Not to keep bringing everything back to data science and AI, but let's just say pricing fan of outcomes by shipping lane has grown by sort of 10x the spread between different lanes because demand is so variable. And this is a very old school industry where price is set by people calling each other and freight brokers. And so if you can hedge against that by pre-buying capacity or changing what freight providers you work with, I think that could be really meaningful to margin structures and dealing with this environment.
Yeah, some more concrete advice for sure. All right, so then the next thing is that the de minimis loophole potentially will be going away on May 2nd. And so I had actually, in another version of this slide, I had of the Shein and Temu emails that went out announcing that the prices would increase effective tomorrow. And so because of this and their inability to get things drop shipped from China directly to the US anymore. And so I think that presents a really interesting opportunity to anyone who would see Shein or Temu as a competitor or who has seen a declining share from that. Okay, so that's kind of the first side of the demand side of if you have Chinese exports, if you have shipping dependencies from lanes that might get clogged, or you might see the supply from a competitor like Shein and Temu plummet, what does that mean for your brand? And those are kinds of questions. All right, the next part of the framework is how are your brands and products perceived and experienced by your customers? Are you a necessity? Do you have discretionary value? Are you discretionary premium? Or are you a lifestyle? And so I know, Hani, you kind of said, hey, like based on my buyer set, my segments, my personalization, I have people who might think of me in each of these ways. Do you want to expound on that, please?
Sure. I mean, our business is selling very high-end gear, right? The joke we say internally is we sell luxury goods sometimes for certain people, but we don't get to enjoy the margins, right? But that's not true for everything, because you could totally take a $5,000 camera body and a $3,000 lens that goes with it. But whether it's a necessity or discretionary depends on who the person buying is. If it's a person whose livelihood depends on it, right, of monetizing their investment in creating content or documenting this event, such as, right, that investment is worth it because they can recoup that investment in a couple of jobs at most, right? So that way it's good. But even in that class of people, you got to think of where they are on the spectrum of skill or how professional they really are, because there's a lot of folks, and we're starting to see it. You know, there may be customers who bought the latest camera body from Sony or Canon every year, but where things are and the uncertainty in the overall market too, because it's not just the cost of the goods themselves, it's how are they going, will they be able to monetize that craft, because other companies will pull back, all that stuff has an impact, right? Because then they'll say, okay, I can do with this camera body for another year, I don't need a refresh cycle. So it is different for our different customer bases. And I mean, there's those who definitely always have discretionary income no matter what, right?
Exactly.
But in that case, they too may say, I'll see. I don't want to pay over a certain premium even on that, right? Like everybody has their limits, and you know the joke is rich people stay rich by not overspending on things they know they don't have to. So,
yeah, I think your framing of this reminded me that understanding your customer always needs to be the first thing you do, right? Of why are your customers coming to you? How do they experience? That's why I framed this the way that I did. Of eventually, this was not the first draft of this question, but how are they perceived and experienced, right? Which is not what do you think? It's not what. How do I position myself? What do I think about me? It's what do my customers think of me? Indy, do you want to talk a little bit about? I think you talked about how even the top decile of income, right? You want to expound that?
Yeah, I mean, I think for this room, in terms of thinking through price sensitivity and sort of demand elasticity, where you are on the spectrum and understanding your customer, it's all up for reanalysis, right? And so what do I mean by that? Over the last 5 years, something like 47 to 50% of discretionary spend in the US has come from the top decile of households. That's everything from premium air travel to luxury brand purchases to real estate, second homes. There's a whole set of markets you can derive off of that, like who's buying furniture. And for the first time, you have a meaningful pullback in the wealth effect, right? What people's retirement portfolios and savings portfolios are valued at. This could all go away in a month based on what's happened in the last 2 weeks. We don't know yet, but you can see that wealth effect pullback show up in all kinds of places. Airlines had totally reoriented their business model to be about the front of the bus seats and premium upsells. They're reporting soft earnings. You see it in second home market, real estate, et cetera. That pullback is very real. And that's going to show up in discretionary premium and lifestyle-oriented purchasing. With that said, I think you look at the data of the past series of downturns, I mean, maybe we don't head into one again. This could all change course. That is the fan of outcomes Bennett slide had earlier, like a 6% swing. But let's take discretionary premium or lifestyle. If you look at premium cars, and I'll geek out as a car guy for a second, every downturn, the Porsche 911 sales don't change. That class of purchaser, 150K plus car, totally inelastic demand. And it's collectible, there's scarcity value. There are real generalizable principles there that can apply to pieces of your product portfolio. But Porsche's entry-level models, those have incredibly volatile demand in a down cycle because people trade down. And so how do you think about what that means for your product assortment and portfolio and where they fit on this spectrum? I mean, I know, Honey, you all have been experimenting with more financing options, more refurbished options to capture that swing, that rotation in price sensitivity.
Yeah, that is exactly it. I thought we were going to get to our strategy for managing, but that's exactly right. I mean, by me saying what I said earlier about sensitivity and where people find value, I think you have to get them past that, right? That initial sensitivity piece. So when I look at this, even for the person who is buying it as they consider a necessity, and like I said, they may consider holding off on upgrading that body. As retailers, right, my job is to still lower that friction for them so that they feel like even if they see the price differential is up, right, by whatever X percent, by giving them, rewarding them their loyalty for shopping with us, or potentially offering them very favorable financing terms that can spread out the purchase over a long time without incurring too much interest and all. These are the ways we kind of manage this market, right? Like this is the only way you can get people past that, because again, we're in a period of uncertainty.
Yes.
I mean, I can tell you our past month was fantastic because a lot of people bought early, and you saw it in the headlines too. I mean, people went crazy on iPhones before they found that there was an iPhone exemption.
Yes. Yeah.
But it's the same, and we have to manage that, right? It's just, how do you communicate? How do you make them realize? And you keep an eye on your competitors as well, and I do have a big one out there. But we keep an eye on each other as well. We track what we're doing. Nobody wants to be the first to raise prices because you don't want to lose that customer, because otherwise they're just going to shop, and Google makes it easy, right, to find the cheapest price for any item. And so you got to balance it all out. And sometimes you just can't afford to take a loss, right, on an item. And I actually heard a story just today of on our B2B side of the business where a fairly large order was made, but one of our buyers missed the opportunity to buy and lock it in advance, even though they were told, like, just go ahead and buy it, just go ahead and buy it. And now he's stuck with a deposit, a purchase order, but they're completely upside down on the deal because they didn't make the move fast enough to buy enough inventory. So, I mean, these things happen, right?
Yeah. Taking a little bit of a step back to necessity, think eggs. Discretionary value, right? Think of who your competitive set are and where you position next to them. Do you offer this loyalty? Do you offer a customer experience? Do you offer price, right? Discretionary premium would be obviously above that in terms of AOV, in terms of potentially perceived value, the low-end Porsche. And then I would argue that the high-end Porsche, I'm sorry, I'm not a car guy, I don't know the number, would be lifestyle choice, right? Like that's something I want to show off. And so if we take that a step further, it's not just who your competitive set might be. Let's say that you're in tires. It also is, where is that discretionary spend coming from in terms of a wallet share? So let's assume that we're in a 6-point down kind of land. So wallet is shrinking. Let's assume that for a moment. Let's assume that there's all these value seekers. Let's assume that all of that is happening. What people will do is they'll say, I'm not going to travel in first class. I'm going to take my family on a road trip. I'm going to take a road trip on the Pacific Northwest because I don't want to go to Europe right now because Europeans are kind of unhappy with Americans. And so instead of doing an Emily in Paris moment with my teenage daughter, we're going to go, to Yellowstone. This is not trading down in a traditional sense, but all of my auto parts manufacturing clients educated me on this, and they showed me the data from the prior recessions, and they assured me that this is what they thought would happen again. And so I think that's very interesting for you to understand your customers. Where could you eat from the people above you in the value chain or next to you in the value chain? And I think people who have a really strong sense of that are going to do very well here. Anything other than you like this photo?
I mean, I think this is a really good illustration that discretionary premium in a downturn is the worst box.
Yes, 100%.
You either want to be lifestyle and therefore a necessity in an identity sort of way, or you want to be necessity and the next best thing is discretionary value.
Yes.
Because people are still going to,
They will spend.
they will spend.
They will just be
They will
careful.
spend less.
Yes, they will spend less. All right. So we talked about lifestyle brands here a little bit, and so I've chosen some examples, and this is my opinion. If you have worked at, represent, or love one of these brands, please do not come at me for my own personal opinions. All right, a Rolex is the kind of brand that I would argue, if I have it and it's legitimate, I don't particularly care if I bought it from Rolex. I just want it to be a legitimate Rolex. And so I might get it from eBay, or I might get it from another retailer, right? Nike, went off and tried to control its own distribution channels and who it would wholesale with and who it wouldn't, for example. Pandora obviously was up here on stage, right? They feel very well positioned to me as a lifestyle brand, where they potentially also could fit into that discretionary value and take from other jewelers, right? And I know I can't recall off the top of my, Drunk Elephant. Drunk Elephant is your brand, so it made the list. Do you want to talk about how you think about them?
I'm deeply qualified to talk about trending cosmetics brands.
Yeah.
But I do think, let's go to the framework you highlighted. I think niche cosmetics brands often do become lifestyle icons. In some way, I'd sort of go past lifestyle and go back to that word of identity. I use this product, and that says something about me.
Yes.
And I think that is at work with brands like Drunk Elephant that have a strong following.
Yes.
It's obviously a hard thing to create in reaction to a response if you don't already have it. But it is all what we should all aspire to where it's possible.
This is the kind of thing that doesn't take 9 months to change. It takes years, maybe a founding to change, maybe a complete revamping. But I do think it's important to understand Tom's is on here. Tom's had a moment, and then it had a pullback, and now it's back again with the generation of people that did that. Abercrombie and Fitch had a similar kind of experience where it really resonated with a brand. It had some down years, and now it's back resonating again with those people. So it's very interesting. It can be done, but it does take a lot of effort. If these folks are in your category and you're directly competing with them, it's going to be tough. And some of these people on this list maybe aren't lifestyle brands, and they're going to find out.
Maybe the one other call out there, Bennett, is I do think there's lots of data that says in downturns, discretionary premium is okay if it's a micro luxury, if it's treat yourself. Like we all seek joy when there's a grind. And I do think cosmetics is historically one of those categories, as an example. You could argue, and some of this, we'll see how it plays out, but I don't think people are going to stop drinking $7 bobas. That ship has sailed. That's a durable trend, right? I think people are going to continue to pay for premium ingredients in their food. I don't know if they're going to fully trade down to not organic. And so I think some combination of what parts of your product portfolio play to durable trends that are micro luxuries and give people joy is an interesting analysis to think through in terms of assortment planning in this room.
Yeah.
You know what I advise my clients to do? Bring joy to their customers. I think it's really good advice. Absolutely. Hani, how do you think about joy in the way that you bundle, in the way that you price, in the way that you surprise and delight, especially in this kind of environment?
Yeah, I mean, I have to agree with what Indy said, right? Like you have, so let's take it, right? Even people want to spoil themselves. They work hard, they do everything. Somebody who's going to go on a trip with their family and it's a special trip, they're very likely to still try to upgrade from just having their phone camera, iPhone camera.
I'm going to the Alps. I'm going to the Rockies. I'm
Yep.
going on that. I'm going on that trip, that road trip. I'm going to have some awesome photos.
Exactly.
100%. That will
and
happen.
that's where it is. And the way we try to manufacture that, first of all, that ideas, put that seed in people's minds is, of course, through a lot of content creation, a lot of advice and things. And people find it, right? Then they go, hey, what do I need for taking a bunch of really nice vacation pictures in the Bahamas or something? I don't know. And that's where they find us. And then between that and their own desire, in most cases, a lot of people have a bit of an artistic tilt to them, right? They like taking pictures, and then on top of it, they want to take pictures with some cool gear that they know will give them even better pictures. We do engage those people. We try to find them. We try to talk to them through all of our channels, social media, YouTube, you name it.
You try to find your lifestyle customers.
We try.
Because
it's a community that's engaged. Folks who start interacting with our content and all, we do try to more effectively talk to them, right? I don't know if we are very good at it.
It's a hard problem.
But we do try, right? Yeah. I do believe we should be doing better at it, given all the investments we continue to make. But that's where things are. I mean, it's and the delight really comes from, in my opinion, comes from not just leading up to the sale, it's the post-purchase. That's where you really add the delight.
100%.
And in our case, as I said before, a camera is an investment. And what's the point of buying a very expensive, even $1,000 camera if you don't know how to use it? Forget the $3,000 one. But if you can do more to enrich it, make that content accessible, give those people access to experts, it brings the joy. I know Indy once got to experience the Adorama joy of buying something.
Yes.
And he enjoyed it. He spent more than he had planned to.
So our CFO is desperate to get a coupon code, and I said, from you all, and I said, how dare you? Go buy a bundle. All right. So the last concept here is your margin structure, and your margin structure. If you're, are you coming from a position of strength or not? This, I apologize, Indy. I did have the team update the slide. So this is supposed to show percentages. This is a 35% margin business, but contribution margin business. But what I would say is, if you're a necessity or a lifestyle, or your margin structure can support it, can you afford to pass on your increased cost to your customer without losing share? How much power do you have because of that? If you don't have the margin structure, then you're going to have to pass on the costs, and then you have to think, how does that affect my market share? So I won't say which brand I've given this talk. I've talked with a bunch of brands. So I want to just piece together how you might think about this for your own sake. A client had 70% of their inventory in the category that they were in manufactured in China. Mm-hmm. They have very low margins. Let's call it 8% margins. And they're a very large retailer. They have an online presence, and they are not a direct-to-consumer brand. And they would not consider themselves to be a lifestyle brand. They would consider themselves to be a discretionary value brand. I'm curious, do you all think that they are raising their prices or no, given that fact pattern? I see some nodding. You're right. They are. In fact, they already have increased their prices. And so hopefully you can see, like, hey, if you take these pieces together, you might start to think, okay, I can understand what I might need to do in order to be ready for this. I try to diversify my supply chain. I try to understand my brand positioning, which segments of my customers are going to react to what, and then at the end of the day, pricing strategy and what can I do or not do about it. I've called out 2 more clients that have publicly discussed what they are doing or not doing. And so Walmart has not changed its full year guidance on margin structure or its revenue. And so it believes it can, weather this storm through all of its strategies. Aloe, I would argue, is a lifestyle brand with high-income customers, and they're doing just fine. And so you can look at their site and you can look at how they're doing things. Another example would be Abercrombie & Fitch, that is announcing haul-worthy kind of things, which is Amazon's competitor to Shein and Temu. So trying to pull from that. So Hopefully this framework is helpful. Any last thoughts from you all, especially on margin?
Yeah, I mean, listen, I joked earlier, we sell luxury goods without the luxury good premium margins. But here's the thing. We cannot raise prices independently, and we cannot discount independently. What has always worked for us, irrespective of now or even in the past, is we provide value through bundling. And so how do you manage that, right? Like if the entire, the manufacturers of our cameras, Sony, Nikon, raise cost of goods to us, we don't have the margins to absorb those increases, so we do have to pass them on to our customers. But can we still deliver value? Yes, because what we'll do is we'll bundle it with a lot of other gear that they probably need with that, and then try to make that much less bitter pill to swallow for our customers that want to do it. So that's kind of our strategy around it.
And Indy, you had some guidance for your portfolio companies of like a line to think about. You want to share that?
Let's go in a different direction.
Okay, yes.
Which is, I'll close with this room has dealt with one major global crisis per year for 5 years running. This too will pass. And thankfully, a lot of these are math problems and supply chain problems and customer knowledge problems. You've been hardening your approaches and systems on how you're dealing with that for a while now. I think the hard part is honestly, how do you avoid a hunkering down mindset and continue a growth mindset on adaptation? And there are probably internal org changes to support that. There's probably some tooling to support that, but like I said, this too shall pass.
I agree with that. I mean, last night at midnight, I was trying to buy a Nintendo Switch 2 console, and I still couldn't get one.
This whole presentation might be out of date tomorrow, so that's the only thing I feel confident on. All right. I think we're at time.
We are at time.
Thanks, Stu. All right. So no questions, I'm sorry. But we're around if you want to talk, but hope you all found this at least helpful. All right.
We did. Let's give him a big round of applause,
Thanks,
everybody.
guys.